please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The market is off about 20-25 points from the day's high, 70 points still in the Nifty at 10,752 as we begin another edition of Midcap Radar. I'm Prashant Nair. With me is Ekta Batra. Ekta, afternoon.
Hi Prashant, absolutely. Well, it's turning out to be a solid session for us. Off the day's high, but still we're at record highs. We're above 10,700 as we speak for the Nifty. And we're going to have the European Open soon enough to contend with as well. And I think that should probably just come up for you. Absolutely flat in terms of a start. So let's see whether that pours a little cold water in terms of our gains, considering that we have had the global markets on our side today in terms of the global equities gaining. Asia has been strong. We've had US, which has been at record highs. So let's see whether that dampens any spirit. Absolutely flat start for the CAC, FTSE and the DAX.
As always, let's bring our technical expert on the top of the show. Mitessh is with us today. Mitessh, thanks very much. I mean, do you make anything of this slight climb down? We were up 90, up 70 now in the Nifty.
Good afternoon. So I would not really worry about a 20-point drop, especially given the fact that the Bank Nifty still looks strong to me. From the morning, I've been saying is that the Bank Nifty is broken into fresh highs, so it will cover up for its underperformance. And a lot of individual banking names look strong to me. So, you might have slight churn, and the Nifty might go through this intraday dips of 20-30 points, but I would not really be worried.
What would you put out as trades, Mitessh?
So, HDFC Bank, as I was just saying that, it's the bank components, the heavyweights of the Bank Nifty which are interesting me. So, HDFC Bank is one of them. That's a buy with a stop at 1884 for targets of 1930. And a mid-cap stock, which is Star Paper, that's a buy. Keep a stop at 293. Look for targets of 325.
Okay. Well, at the risk of repetition, Mitessh, would you have, a view on a couple of these broader market stocks which are surging? So Prime Focus comes up on the radar. It's up around 11% odd. And we have, smaller stocks, say something like a Star Paper, which has risen 9.5% odd as well.
Yeah, so I cover Star Paper right now. I think, the pattern is quite positive. While I've given a trading target of around 325, my sense is that this is a stock which is clearly showing signs of medium to longer term uptrend. So I think eventually it should head towards 360, 375 if somebody was to hold it for about 6 to 8 to 12 weeks and maybe even higher levels then. So I would be quite positive there. Coming to Prime Focus, the stock has had a decline in the last 4 days, came to support levels of 115, bounced back strongly. I think it should re-enter its uptrend once it starts getting past 130, and then we can look at targets close to about 155.
All right. Just one quick last name, Mitessh, if you could look at the chart and tell us, this is Tribhuvan Das, TBZ. How is this one sitting?
Prashant, I've not been tracking the stock regularly, but an early look, what I can see right now at this stock is that it peaked out at 145 way back in November 17, and it's completed what we call as a rounding formation. So if it starts getting past 145, the next logical technical target here should be close to about 170.
Okay, all right, Mitessh, we're going to let you go on that note. Thanks very much for joining in and taking us through all of those strategies and views on stocks. Well, for the mid-cap index, we've given up gains from the day's highs. So that seems to be a trend that we need to watch out for, especially with the advanced decline ratio. It's still maintaining on the positive side. So let's see whether that sustains or not. But currently, the mid-cap index has flattened out. One stock, however, surging within the broader markets has to be Muthoot Capital, which is up close to around 20% the last time I checked, on the back of what is a very strong set of numbers this quarter. We spoke to the COO of the company about their assets under management growth, and let's listen in to what they had to say about the way forward as well. Let's get talking to a couple of companies now. KEC International is in focus. That stock is buzzing on the back of around 1,095 crore order win, both from domestic as well as from international customers. We have with us Mr. Vimal Kejriwal, the MD and CEO of the company, joining in to discuss this particular order win. Mr. Kejriwal, if you could start by telling us how much is domestic, how much is international, when do you begin executing?
Good afternoon, Ekta. Most of it is actually international, with almost 700 crores and odd coming in from the international market, and the rest obviously is from India. But if you look at a business-wise, then almost 75% is coming in from our core T&D business and 15% from the railway business.
This is obviously, I mean, orders to a KEC, no joint venture, etc. required, right? I mean, you execute these on your own.
These are all in KEC, except there's a small 30 crore which is in our 100% subsidiary SAE. Okay. So that's again 100%.
Again
KEC.
100%.
Yeah.
And margin profile very different in all these orders, or
margin
broadly?
Profile would be different, but I think on an average we'll probably end up around 9 to 10% or so.
Which is around what the company average is.
Yeah, absolutely.
Okay, well, we have some news on Lupin as well, where we'll just get to that in just a bit. It is for their over-the-counter segment in India, so that should be a positive for them.
Whack.
Yes, it's already existed in the market. I think maybe it was a prescription drug earlier. I doubt it, but it already existed in the market. So I just need to go into details in whether it's a brand extension which has come into the market or not. But that's some updates on Lupin. Remember that India is turning out to be more of a focus market for a lot of companies vis-a-vis the US. So it'll be interesting to see what they deliver there. But Mr. Kejriwal, what can we expect probably up till the end of the year when it comes to your order book? Say for FY18, where do you think you can close?
See, our order intake roughly has been around 9,000 and odd till now, which is almost 10% higher than the previous year. And the order book right now is around 15,500 crores with an L1 of another 5,500 crores. So my presumption is that we should be ending up with maybe another 3,000 or so, 12,500, 13,000 crores of order intake for the whole year should be what we should be achieving.
And then about what, so order book could be 18,000 crores or so?
It may not be 18, but we'll also be executing for the Q4, which is always a very high execution quarter. So I presume it should be around same 15,500, 16 or maybe 16,500 should be the order book. Any
large orders, any tenders being put together, anything large coming up?
We have some large, if you look at our L1 position, there are a couple of large L1s which are from SEBs and Power Grid. So I think that they should get awarded in the next 15-20 days or so. So that should add to our domestic order book.
All right, Mr. Kejriwal, thank you. Good luck. Appreciate you joining in for a brief chat on that order, 1,100 crores. But Ekta, you have more on Lupin.
Well, not really, but I just want to know that, I think it's probably a pan-India launch which they've done of the brand which already existed on their in their stable. So maybe that's probably the difference, and also that it is an over-the-counter product, which is obviously what they're doing with Softovac. I mean, I think it's quite a known brand when it comes to bowel irregularity, etc. So maybe there is some amount of uptake which is taking place for Lupin simply because the OTC market in India is something which I think a lot of people would be looking at more lucratively now. But that's on Lupin. A little bit of an uptake is what we've seen.
The market's not doing very much different. So 67 odd points higher, which means 25 points off the high. But this is still a good outcome on a Monday morning, which I think people would be very happy about. There is news coming in at the bottom of the screen. This is India and Israel sign an MOU for cybersecurity and oil and gas. So just the first flash, and I'm sure details will follow. I guess that's the briefing that is going to happen pretty soon, and we'll maybe cut across to that in a bit as well. There you go. I mean, I think those are the documents being exchanged and the ceremony which is taking place. But we'll have more on that as we go along. Let's shift focus to global markets and macros. Remember, stocks have started 2018 in the best fashion in a long time. Joseph Little is Global Chief Strategist at HSBC Global AMC. He joins us to talk about his perspective on these markets. Joseph, thanks very much. Could you begin by telling us what your sense is about global growth? 2017, we saw the best global growth since the great financial crisis of 2008. Would you say that for major economies, 2018 will continue the trend of very strong growth?
You're right. We've had a really good phase of economic performance globally, really. We have termed it a synchronized global growth expansion, and it really reflects strong growth across all different regions during the course of 2017 and since the middle of 2016, both in advanced economies and in emerging markets. Our sense is that it does continue. We think that the mixture of growth and inflation will become a little bit more tricky going forward, but the growth picture continues to look very strong and globally synchronized. It's just that that's going to begin to create some cyclical inflation. So that's a little bit of a challenge for investors as we go ahead. We still think we're in a very good phase of economic performance, and that should mean good news for the corporate sector too.
Joseph, oil is up, commodity prices, metal prices, etc. are also moving up. So is there any chance at all in your mind that 2008 we basically continue with the good growth we saw last year, and also inflation under control, subdued inflation?
Well, as I say, I think we're in an environment of synchronized global growth. And during the course of 2017, we had this very low inflation, very subdued inflation alongside that. Our sense, and on the basis of the work that we've done, it suggests to us that inflation is going to begin to build now cyclically. In fact, there's already a number of indicators, particularly in the US, where cyclical inflation seems to be building on a fairly meaningful basis. This is still an environment globally where inflation is relatively subdued versus historical experience. So what we think is going on is a bit of cyclical inflation, even within an environment of relatively stable prices. But as I say, it does mean that the mixture of growth and inflation is a little bit more tricky from here, because if we're getting some faster cyclical inflation, that does mean that policymakers have to begin to accelerate the pace of rate hikes and rate movements that they're making. And investors need to be thoughtful about that and aware of that, and we need to think hard about how financial markets could respond to those factors.
Is your base case that inflation will rise more than we are factoring in, that say central banks will have to raise rates, or at least any rate global yields will rise, and therefore emerging markets may in fact see some early fairly sharp out this year, according to you?
Yes, so you're absolutely right that the kind of rate tightening which we could actually experience in financial markets can come in different forms. It could come in the form of more aggressive interest rate rises from the Fed or the Bank of England or other central banks, or it could come from the bond market itself. So it could come from movements in the yield on long-term interest rates in financial markets. And as you say, that does have implications for a whole host of risky asset classes. I think the key thing to bear in mind when we think about how an asset class like emerging market equities or emerging market debts might fare in that environment is to think hard about how those asset classes are priced to start with, because a lot of the dynamics that might play out in an individual asset market are really a function of how that asset market is set to start with. An asset class where everybody is very pessimistic about the outlook, even if the news comes out slightly better than it's feared, can still do quite well. And we feel that emerging markets are still in that kind of environment. That is to say, when we look at emerging market equities and when we look at emerging market debt, relative to the other opportunities that investors have, they continue to look pretty attractively valued. That's helpful because it means that there is not yet that kind of exuberance in how they're priced. And it means that if we do get a little bit of a tougher environment developing, faster inflation, more tightening in monetary policy, it might mean that our preconception that emerging markets are very risky and very sensitive to that environment might not be right at all. There could be a whole host of other asset classes which are a bit more vulnerable to that risk than emerging markets look like they might be today.
All right, Joseph.